Shikim Shari. Morning, Wednesday, November 20th. Just had myself coffee. Let's get to it. I have a question on AMN from a viewer. I mentioned this stock, I believe, at least 2 weeks ago on a tax loss focus. Back then, it looked like potentially it's a spot to buy, and then of course you have earning. When earning came out, was it November 4th, November 7th? Yeah, unfortunate. Earning came out, not good. How bad was earning? 61 cents. As you can see, that's way lower than. So yes, TA is one thing. Let me backtrack on this a little bit and talk about TA. TA works until there is a catalyst, right? And the catalyst is often news that can move the stock either outside of a pattern or into resistance or support and news. Yes, so yes, it is at ref low support, and then you get the bad news and really bad news. And as far as earning, that is not unexpected. That's the reason. The reason why AMN moved like this, because the weakness in healthcare is obvious. For those in the private chat group, I post multiple layoff news from various hospital chains across the countries, across many regions. So there has been weakness in healthcare, especially hospital, and AMN specialize in job market for the healthcare industry, whether it's dental, private offices, hospital, you name it. And this play into, of course, the dilemma that I dealt with as far as my view on the weak economy and, of course, the government narrative that everything is fine, right? They put out good numbers, great job numbers, great job openings numbers, low unemployment. Yet, all I see daily is layoff news and weakness in real data. And this is one of them. So now the question is this the bottom as far as this? All right, so let's go back and look. Let's go three. This is okay. This is the weekly chart. So let's go to the daily chart first. Okay, so there you go. That's earning right there. Right, earning, and they keep going down. Now, also, for those that follow me for a long time, I talk about patterns. When you see red candle like this, you want to see two continuous green candle is a trend break, right? And here you have one, and then you have the one inside. Okay, but first before we continue, let's go back to the five-year chart. Okay, let's go back. Is this a random spot or is it some kind of support? That's the first question. Let's go 5 years. Wow. All right, so yes, way back in October, right, it was ref low, it was pandemic low. So yeah, that was a great spot to take a chance. And I did mention in that video, I believe, is my concern about the weak sector. That could be the problem. That's why I was, I point out as a potential tax loss buy, but I also point out that my concern is the weak job market in the healthcare. So the fundamental is bad. The TA was good, right? I have always said that it's best to have good fundamental with good TA. When you have good TA, bad fundamental, that kind of clouded the picture. And let's go back 10 years because 5 years is not good enough. And there you go. Not random. See, right there. Look at that. So let's draw in that zone. Okay. Let's draw in the zone. It's rare that anything is random. Okay. It's not. Let me make sure I get the entire range. Whoa. Dang, that's not it. Remove drawing. Let's try that again. Okay, because basically I capture the entire range of this low here as well as the tip of this low. All right, so that's the range. All right, so let's make sure that we carry this out. All right, now let's go back to the 1 year chart. All right, you got 1, 2, 3, 4, 5, 6 red candles in a row. Quick review for those that don't know what the red candle means. It does not mean that it's go down every day. It basically, a red candle means that the closing is lower than the opening, right? And the green candle means the closing is higher than the opening. Okay, so that's the key difference. Just because something is red does not mean that it was negative that day. It means it's negative at the end of the day compared to opening of the day. Okay, so keep that distinction in mind. So you get 1, 2, 3, 4, 5, 6, and then you have this. Now, it would be nice if this was a green candle to give me a better sense that the bottom is in, but it's not a bad candle because it is within the range of this big candle here. So this big candle here could tell you that the reversal is here, and this is not confirming. Now, what would be confirming? Breaking over this right here. Okay, so on the high of that is 2668. If there is a move above 2668 and sustain and close above that, then I say that's a confirmation that the bottom is in, and the next move is higher. How high? Well, at first you gotta look at the 20, but I think the 50 gap fill, so there's a couple level above, right? So if you have, for those that have the fund, I do think there is a move here to buy 26-ish, right? 26. If you want to be patient and wait until the confirmation, 2668. There's a 20% move, right? Up there. So now I would be very bullish beyond this right here. See this consolidation range here? Yeah. The sideways move for quite some time. Yeah, that's the area that you should get out. Gap fill would be a gift at 40. So if you buy at 26 to 40, that's nice. That is really nice, right? You're talking 30% plus. So I like it. I don't hate it here. I just want confirmation. Nike. Oy. It's all about China. And as you know, the Chinese stock market is taking a beating, right? I mean, you got the move up because of China move, right? If you go look at the Baba chart, the Baidu chart, yeah, they have, sure, the move in Chinese stock was more pronounced and much bigger move, but then the crash is also a much bigger crash. Well, guess what? Nike also mirrored that to a lesser extent, but still, that is all about China, right? The Chinese economy is in the toilet. The government is throwing the kitchen sink, the toilet, the entire bathroom. They have thrown in the entire bathroom into and the kitchen. They threw in the kitchen sink and and the bathroom, trying to revive it. I don't know. The problem that, okay, let me go into another tangent. The problem that the Chinese economy face is, just as it is trying to come out of a recession, it's facing global weakness. That's the problem. It is not getting the pull from our economy or Europe that it needs to pull itself out of a recession. It cannot depend on its own consumption, its own people to pull itself out. Because guess what? Chinese was growing so fast because it was able to gain market share into global economy. You understand what I'm saying, right? I hope. So now that the global economy, regardless of what we are saying in this country, in Europe, they already say it. Okay, in Europe, they already have turmoil, Fed cutting rates, slashing rate multiple times, layoff in places that you have never heard before, like um, Volkswagen. For the first time in like 80 years, they had to have massive layoff because the demand. So the global growth or lack of there is hurting China and not helping them to come out of this recession. Now, let me pivot into what I see as um, the problem that we will face. For those that forget, back in 2008, 2009, when the rest of the world, and I mean the rest of the world outside of China, was in a massive recession, guess what was not in a recession and was growing like crazy? China. China was growing, was spending money like crazy, was growing, and investment was booming because of the Olympic, right? There was so much growth in China back in 2008, 2009 that that played a big part in pulling the rest of the world out of a recession. Nobody talked about that, but there was a dynamic that was going on back in 2008, 2009 that we cannot ignore. China was not in any sort of a recession back then. They got the Olympic, they got insane growth, so much investment from Apple, many tech companies that moved into China. Yes, that happened. That helped pull us out of a recession. This time, we are not helping them. The global slow economy and weakening economy are not helping China. And if we are in a recession this time, next year, we don't have China to bail us out. So keep that in mind. Back to Nike. I don't think that, I think the trade-off right now is worth adding here or buying here. To me, 73-ish. I wouldn't buy at 73. I would sell puts at 70. Let's see. Let's see. Now that I ran and yap for 15 minutes. Trade options. Not much juice here, okay? But I see 72 can get you maybe 15 cents. That might not be a bad play. I'm looking into next week. Let's see, next week. I'm sure the 70 would do, but yeah, see, I like it here. I like 71.70 tight spread. Tight spread. If I would put an order out there for 71.70 tight spread for a dime. Okay, for a dime, I take it. I would sell multiple contract right there. To me, that's worth the risk. Maybe 2 or 3 for myself. I liked it. I like Nike here at that at 71.70. And if I had to get assigned the share, I don't mind it because I think that's the floor for now. Okay, until potentially the next earning. But coming into season, I like it. I like Nike here. 71.70 tight spread. I like it. Now, if you bowl, then you can sell a naked 71 for 24 cents or whatever it is, right? Because then basically you're buying it at the same as that. Okay. Now I'm watching INTU. INTU took a beating yesterday. A beating. Earning is tonight. Earning is tonight. So this can go wild. Yeah. This is, like I said, this is ugly. This is oh, let's change the. Let's take out of this fib thing. Okay, let's get rid of this fib line because it's way old. Remove it. Let's do a fib from here. Okay, because that's basically year over year low, a good spot. Yeah. Let's do a fib retracement. 714, 78. There you go. All right. Look, 61.8 is right where things are bouncing, resistant. So after hour, depend on the move. 617-ish might be a spot to put your order. For me to maybe throw in a few order after hour, should there be a dump for whatever reason. But for now, it came down to the 50, bounce to the 20, right? See, it's green candle. That means it opened bad, and then it finished decent. It didn't finish at the high of the day, but not bad. But it as I would say, behave very TA wise. It didn't come down to some random spot. It came down to the 50, bounced to the 20. The gap fill is 622.29. So after hour, the level to look for, of course, should there is a breakdown, is the gap fill at 622-ish, and then 617-ish as far as the fib. So that would be the two level I'd be watching for. Now, if there's a pop, then nothing to do. Okay, nothing to do. But if you own the share, and if the pop, especially if the news is nothing great, I would say trim, sell, especially up there 654, the gap fill for sure. Okay, so that's it. Hopefully I answered the question on AMN and Nike, which I like it here.